All right, let's dive right in. Today we're looking at growth stocks, specifically an article from the Motley Fool that caught my eye. It was published just yesterday, and they picked out three companies that they think are going to be winners in 2025. And some of these picks, I gotta say, they really surprised me. But before we get into it, the standard disclaimer. We are not offering financial advice here. We're just exploring some ideas.
Yeah, that's always important to remember, especially in the kind of market we're in right now. The article even talked about how much harder it's gotten to find good growth opportunities.
Yeah.
With all the volatility and uncertainty.
Right, exactly. And they really didn't go for the obvious picks either. Like one of them is a company everyone knows, but they're trying something completely unexpected. And another one is like a total comeback story. I actually want to start with the one that really threw me for a loop. Amazon. I mean, they're already huge. How are they still considered a growth stock?
Well, it's a good question, right? Because we usually think of growth as something that happens in like the early stages of a company. Yeah. But even giants, even the Amazons of the world, they can still find new ways to grow. And that's what they're doing with this new thing called Amazon Haul. It's basically a whole section of their website dedicated to like super low priced goods.
That's what I was so surprised about. It's like they're acknowledging that, hey, not everyone wants to pay for premium everything. And they're actually willing to go head to head on price with companies like Shein and Temu. Like, they're going after a completely different customer than their usual Prime members.
It shows that they're not messing around. They really want to stay on top of the trends. And this move could be huge for them. Think about it. It could totally explode their customer base. Maybe even change how we think about Amazon as a brand. On top of that, their stock is already up 50% this year. But, get this, it's still considered undervalued compared to like how it's performed historically.
So they're getting bigger, broader, and their stock is potentially a bargain.
That's a pretty compelling story, I gotta admit.
Yeah.
But let's switch gears for a second and talk about a different kind of opportunity, Carnival Corporation. It's the ultimate comeback kid, right? In a sector that's been hit hard the past few years.
Yeah. It's a really interesting case because, they've got record bookings right now. People are flocking back to cruises. But their stock price is still way lower than it was before the pandemic. It's almost like the market hasn't fully caught up to how well they're recovering.
So what's the story there? Are there still worries about the future of the cruise industry?
I think that's the big question. Carnival's saying they're going to keep growing in 2025 and 2026. So if they're right, their stock could look like an absolute steal a few years from now. But of course, nobody knows for sure what the future holds. And the travel industry, well, it's always going to be sensitive to, unexpected stuff. True. So investing in Carnival is kind of like betting on whether those strong numbers keep coming up. All right, let's move on to our third company. And this one, I got to be honest, wasn't even on my radar before reading this article, Novo Nordisk. What makes them a potential no-brainer buy?
Novo Nordisk might not be a household name like Amazon, but you've probably heard of their product Ozempic. It's a diabetes medication, but it's become crazy popular for weight loss.
Yeah.
And that's a huge reason why the company's doing so well.
Oh, right. Yeah, I've heard all the buzz about Ozempic. But isn't it risky for a company to rely so much on one star product, especially when you've got all this competition popping up in the weight loss market?
It's a valid point, for sure. The article mentioned that Novo Nordisk is dealing with a couple of things right now. Like they're having trouble keeping up with the demand for Ozempic. There are actual supply constraints. And then you've got more and more companies developing similar weight loss drugs.
So are we saying there's a chance their success might not last?
Well, there's always some risk in the pharmaceutical world, But Novo Nordisk has a few things going in their favor. They were the first ones out there with this kind of drug, which gives them a big head start. Plus, they have a really solid reputation. And their financials look great. 23% sales growth and a 21% increase in operating profit. Numbers like that are hard to ignore.
So even with the challenges, they've got some serious advantages. What's the most interesting thing you've learned about Novo Nordisk so far?
I think what's really fascinating is how they're basically benefiting from something they didn't even plan for, right? Like Ozempic getting so popular for weight loss, that wasn't their original goal. But they've been really smart about adapting to this unexpected demand. It shows you how important it is to be able to move quickly when the market changes.
Yeah, totally. It's like they stumbled onto a winning lottery ticket they didn't even know they had. Now, before we go any further, I think it's worth taking a minute to really understand what we're dealing with here with these companies.
So we've got a giant reinventing itself, a comeback kid, and a company riding a wave they didn't even create. Now let's talk about a company that's really all about growth, pure and simple, Dutch Bros. Coffee.
Dutch Bros. Coffee. Okay, I'm going to need a little background on this one. What's their deal? And why is the Motley Fool so high on them?
Imagine a drive-through coffee chain that's all about speed, super friendly service, and, like, the craziest, most creative drinks you've ever seen. That's Dutch Bros. They went public back in 2021, and their stock has been pretty much on a steady climb ever since.
Drive-through coffee. I mean, that sounds kind of niche, right? What's fueling that kind of growth? Is it just like really good coffee, or is there something more to it?
It's definitely more than just the coffee. They've built this really distinct brand. Like, they're the cool kids of the coffee world, which really seems to connect with younger people. But it's not just about the branding. They've also got a really smart expansion strategy. They're going after areas where drive-through is super popular, and they're really strategic about where they put their shops. Like, they're all about maximum visibility.
So it's not just random. There's a method to the madness, huh? But branding and strategy aside, can they actually back it up with results? What kind of growth are we talking about here?
Get ready for this. Their revenue in the third quarter of this year was up 34% compared to last year, and they opened a whopping 130 new shops. So they have over 700 shops now.
Yeah.
And get this, their goal is to have 4,000 shops in the next 10 to 15 years.
Whoa, 4,000 shops. That's a lot of coffee. But, sometimes really fast growth isn't always a good thing, especially if it's not profitable. What's their bottom line look like?
You're right. Growth just for the sake of growth isn't sustainable. But Dutch Bros seems to be doing it the right way. Their same-shop sales, which is basically how much their stores that have been open for at least a year are making up rolls, those numbers are consistently good. So it's not just the new shops that are doing well. Their existing shops are killing it too. Plus, they're really focused on making their operations more efficient, which is super important when you're trying to grow a business that big.
So they're not just growing fast, they're growing smart. But every business has its challenges, right? What are some of the headwinds that Dutch Bros might face on their way to, coffee domination?
Competition's a big one. I mean, the coffee market is crowded. You've got the big guys like Starbucks and Dunkin', and then you've got all the independent shops too, like Dutch Bros. Really has to work hard to keep their brand unique and stand out. Plus, there's always the risk of oversaturation. If they open too many shops in one area, they could end up competing with themselves.
That makes sense. And, with all that rapid growth, I imagine it's got to be tough to keep their company culture alive, like that special sauce you talked about earlier.
Yeah, for sure. Trying to scale up while staying true to yourself, that's a real balancing act. But all things considered, Dutch Bros seems to be doing a good job. They have strong leadership, a clear vision, and, they've got a proven track record. Which brings us to the world of cybersecurity and a company that's making waves in a sector that's only getting more important. CrowdStrike?
Yeah, no kidding. It seems like every day there's another data breach or ransomware attack. So what's CrowdStrike's secret weapon in this cyber arms race?
They specialize in something called endpoint security, which basically means protecting all the devices we use, laptops, desktops, servers, from cyber threats. But what makes them different is that they use a cloud-based platform, and it's powered by artificial intelligence and machine learning.
Okay, that sounds pretty high-tech. Why is their cloud-based approach so important?
Think about the traditional way of doing security software, right? You usually install it on each device individually, which can be a huge pain to manage and keep updated. But with CrowdStrike's cloud platform, they can monitor and protect devices from anywhere. Makes it super scalable and efficient.
And the AI and machine learning, how does that actually help protect against cyber attacks?
It's kind of like having a superhuman security guard watching over your network all the time. Their AI algorithms are constantly analyzing tons of data, looking for patterns and anything weird that could be a sign of an attack. So they can detect and respond to threats way faster than traditional systems, which often rely on, humans trying to catch up.
So they're basically using AI to outsmart the hackers. That's pretty cool. But how do we know it actually works? Do they have a good track record?
Oh, yeah. They've helped a ton of organizations, including some really big ones, prevent and deal with some major cyber attacks. We're talking about like nation-state level attacks, the real deal. Their technology is top of the line. And they have a whole bunch of happy customers, from Fortune 500 companies to government agencies.
Okay, that's a pretty strong endorsement. But, cybersecurity is like a never-ending battle. Hackers are always coming up with new tricks. So what are some of the challenges CrowdStrike might run into as technology keeps changing and cyber threats get more sophisticated?
The biggest danger is getting complacent. You can't afford to stand still in cybersecurity. Hackers are always one step ahead. So security providers have to constantly innovate. And then there's AI, because it's a double-edged sword, right? CrowdStrike uses it for good. But hackers can use it too, which makes attacks even more complex.
It's a constant arms race. Which is probably why cybersecurity is such a hot area for investors. There's always going to be a need for better protection. So the potential for growth is huge.
Absolutely. And CrowdStrike is in a really good position to capitalize on that.
Yeah.
They've got a great product, a super talented team, and they're clearly committed to innovation. But we can't forget about Shopify, another company on our list. Their story is a little different. It's a comeback story,
Yeah.
but not in the same way as Carnival.
Okay, now I'm really curious. What makes Shopify's comeback story unique?
Well, they're an e-commerce platform. They basically help businesses set up online stores and manage their sales. During the pandemic, they blew up. Like, everybody was rushing to move their business online. But as things started to go back to normal, their growth slowed down, and their stock took a hit.
So it's like they rode the pandemic wave, but now they have to prove they can keep growing in a world where, things are less crazy.
Exactly. And they're definitely taking it seriously. They're expanding their services, offering more tools to help businesses grow their online sales. And they're focusing on expanding internationally, too, to reach new markets.
So they're not just waiting around hoping for the best. They're out there hustling, looking for new ways to grow. I like that.
Yeah, that proactive approach is what makes them an interesting investment, in my opinion. They've got a proven track record, a solid platform, and a clear vision for the future. The question is, can they execute their plan? And can they regain that momentum they lost?
All right, let's recap for a sec. We've got Amazon trying something totally new, Carnival riding the comeback wave, Dutch Bros, expanding like crazy, CrowdStrike, fighting off cyber attacks. It's a pretty diverse mix of companies.
And that's what I love about this deep dive. It shows you that growth can come from anywhere, from any industry. It's all about finding those companies that are adapting to change, meeting the needs of customers, and executing their plans effectively. Speaking of meeting needs, our next company might surprise you. We've covered a lot of ground today, from coffee to cruise ships to cybersecurity. But there's one more company I think we should talk about, even though it wasn't mentioned directly in the Motley Fool article. It's a company that really embodies both the excitement and the risk of growth investing, Tesla.
Oh, Tesla. Yeah, they're like the poster child for growth and volatility all rolled into one.
Exactly. On the one hand, they've achieved incredible growth. They completely changed the car industry. They've become this global brand. And their stock has had moments where it's just gone through the roof. But they've also had their fair share of problems, production delays, issues with quality control, and of course, their CEO. Well, let's just say he's not exactly known for being predictable.
And that unpredictability, that's what keeps things interesting, right? They're always pushing the limits, taking risks, challenging the way things are done. But that also means there's going to be a lot of ups and downs, both in how their business performs and how their stock does. For an investor, it's like you got to buckle up and be ready for anything.
Yeah. Investing in Tesla is not for the faint of heart. It's a company that can swing wildly in either direction. The news, how the market's feeling, a million other things can affect them. You really got to have a strong stomach and a long-term vision if you're going to invest in Tesla.
So high risk, high reward. Is that the basic idea with Tesla?
That's definitely part of it, but it's also a company that's fundamentally changing the world. They're accelerating the shift to sustainable energy. They're pushing the boundaries of what's possible with transportation technology, and they're inspiring a whole new generation of engineers and entrepreneurs.
I'm hearing a little bit of Tesla love there.
Maybe a little, but you got to admit, they've done some impressive things. No matter what you think about how they do it, Tesla is a force to be reckoned with.
And that brings us back to the heart of our conversation today. Growth stocks. We've looked at companies like Amazon branching out, Carnival making a comeback, Dutch Bros, growing at lightning speed, CrowdStrike protecting us in the digital world. And Tesla? Well, Tesla's electrifying the world. They're all shaking things up and pushing boundaries.
And that's what makes growth stocks so exciting. They offer the potential for big returns because they represent the companies that are shaping the future, creating new possibilities, and driving economic growth. But we got to remember that growth investing always comes with risk.
Yeah, it's not a sure thing. These companies are often operating in unpredictable markets, and there's no guarantee they'll be successful. Like any investment, you got to do your research, understand the risks, and make smart decisions.
Absolutely. Investing is a journey, not a sprint. It's about constantly learning, adapting, and staying curious about the world and what's changing it.
And that's exactly what we try to do here on The Deep Dive. Get you thinking, give you some food for thought, and hopefully inspire you to learn more about these companies and industries on your own.
So as we wrap things up, I want to leave you with one final thought. We've talked about growth stocks in a bunch of different sectors today. But what about the ones we didn't touch on? What about healthcare, biotech, artificial intelligence, even space exploration. Where do you think the next big growth opportunities are going to come from? That's something to think about as you continue your own investing journey.
That's a great question. And on that note, we're going to wrap up this deep dive. Thanks for joining us. Until next time, keep exploring, keep learning, and keep diving deep.